On now to GDP figures and electricity, and the Steel and Engineering Industries Federation of Southern Africa, we perhaps know it better as Seifsa, is today calling for a moratorium on additional electricity tariff hikes, arguing that further increases would undermine the country's economic reconstruction and recovery plan. I want to talk to Seifsa chief economist Chifipa Mhango, who says distressed manufacturing firms simply can't afford any more electricity hikes beyond those already approved by 2021. He joins me now on Wednesday lunchtime. Mr. Mhango, good afternoon to you and welcome. First of all, maybe on a positive note, let's start with those GDP numbers from yesterday. Is Seifsa seeing the signs, as they say, the green shoots of a recovery?
Yes, I think at a growth rate of 66% is quite a positive side. But what we must remember that is coming from a low base, especially if you compare for the previous quarter. So anything positive at this stage is actually a positive news for any economy, or especially on the fact that what's going on across the globe. But what is also more important for us is to see what has also been happening since the lockdown regulations were being eased. From April 2020 to September, we've seen a peak in terms of construction and building material sales. We have also seen a peak in terms of the production of the metal industries with regard to production sales. So that's positive news for us. And I think the numbers you are seeing at 66% in a way correlate with what is going on with regard to our industry and also our market base.
Those positive numbers, though, that momentum that you refer to, is not going to be helped if we see more increases in the price of electricity. Why is Seifsa so concerned? You're sounding this note of caution on more than one occasion.
We are concerned because the practical aspect of our industry is not only about costs such as electricity cost, but it's also other factors that are into play that are actually making our industry a bit uncompetitive, both on the local market as well as on the international market. For instance, we've got also rising logistical costs that are also impacting negatively in terms of our competitiveness. We've got rising imports into our market, but we've also got insufficient demand that is also coming in with regard to our market, especially when you're looking at, for instance, the industry where we feed in is actually the mining sector. And we also feed into the manufacturing sector, like, for example, the vehicle industry. But we also feed into the construction sector. In fact, it heavily relies toward the construction sector. So the performance of these key three sectors have got a serious implication towards our industry. So when we see this kind of cost rising, Jeremy, it's more or less like trying to say, here is a patient, you are taking the patient to the hospital. Instead of treating the patient, you are actually suffocating the patient. That's what we're seeing here.
Eskom, of course, says that if it doesn't get the increases, it simply becomes a non-going concern, that it can't afford to operate without the increases.
Well, Jeremy, we are going through a lot of issues at the state capture. You are hearing the issues that have been going on at Eskom. Now, the question you ask yourself is Eskom issue a management issue or just a technical issue? Why do you have to, if we are supposed to be bailing out Eskom, the question you have to take it back to say, suppose Eskom was being managed appropriately, was this bailout going to be happening? That's the question we must be asking ourselves. So let's not cheat ourselves on the basis that Eskom has got a case. I think Eskom has got management issues that they have to resolve in terms of how they manage their funds.
Thank you very much for joining us. Seifsa's chief economist, Chifipa Mhango.